I'm joined by James Demmert, Chief Investment Officer at Main Street Research. James, good to see you this morning. This was a significant number because we know the Federal Reserve policymakers have been kind of grappling with rising unemployment and still too high inflation. Does this kind of tilt the balance one way or another?
It sure does, Michelle. I mean, this is exactly, as a stock market investor, what you want to see. It creates a great setup for stocks. I think not just for the here to the end of the year, that Santa Claus rally, but I think it also sets up for 2026. The Fed's going to have a lot of options to lower rates. So this was a very big headwind number. The government had been closed, obviously, for a couple months, so we weren't really sure where this might come in, but it came in way better than expected. Good for the consumer to have those prices come down, but excellent setup for equities.
Does that change how many rate cuts you think we might see next year?
Well, it's interesting. Before the news on the inflation, there was two set up in the futures market, very likely. Now you're seeing a third creep in for March. And I think that, Michelle, investors want to be careful here. Our advice to investors, be careful about anticipating too many Fed cuts, because that labor market, yes, it's weak, but the rest of the economy is really strong. So if they cut too much, they do risk inflation coming back, which would not be good for markets.
Yeah, and we've got that inflation, stimulus coming, I guess, in the form of tax rebates and the rest. James Demmert, Chief Investment Officer at Main Street Research, thank you very much for joining us.
Pleasure.